Ernie, we're looking at the Mid-America region for July. The index, it declined again, but it's still above growth neutral.
It is. Our survey of supply managers in the 9 states, what we call the Mid-America region, that survey for the month of July was a pretty good one, but as you said, it declined for the fourth time, or I should say the fourth straight month we've seen a decline. And so what it's saying, what it's telegraphing to us, and this again is the states from North Dakota and Minnesota in the north to right down the middle of the country to Oklahoma and Arkansas in the south. What it's telegraphing to all of us is this economy, this regional economy, the growth is slowing, but it's still positive. And a lot of this, of course, is, at least according to our survey, linked to agriculture, which is just not as strong as it was last year. Of course, agriculture is a very important industry in this part of the country.
It shows up in jobs. I mean, jobs are still increasing, but at a slower pace.
Absolutely. Job growth, we track that for the month. Pretty good, but boy, this is just a time of lowered expectations. It's amazing how we Americans have now just, as a person in a marriage of 30 years, he or she just expects less. And that's what we're getting. Yesterday, the GDP number came out for our second quarter. It's 1% on an annualized basis. 1.7%, I should say. 1.7%. And the market rebound, that would be the stock market. That is nothing to jump up and down. In other words, these numbers that we're looking at in our surveys are just nothing like what we saw before the recession. This is a weak recovery, and it's getting weaker, and that's true for this part of the country. It's true for the nation as well. It's just not doing very well, but as the president might say, well, at least it's positive.
Well, the fact that it's not doing well really isn't indicated in the confidence index, which increased for the month, didn't it?
The confidence index was up for the month of July, and of course, housing sector rebounding. And we're seeing growth, go growth in the housing sector in terms of prices that we haven't seen ever. The June to July number, I should say, the April to May number, I should say, nationwide was the biggest growth we've ever recorded in housing in the Case-Shiller index, that is. The latest price numbers are up anywhere from 8 to 10 to 12% year over year. I mean, this is like we're putting air back in that housing bubble. Now, prices are still down from pre-recession levels, but that growth is just phenomenal out there, and that's having a positive impact on confidence. And even with agriculture down and agricultural income and some of the businesses that sell to agriculture, for example, just this week, Mosaic, a fertilizer producer, announced earnings not very strong, sales weaker. And that's spilling over into our survey, and we're seeing that. But again, it's still positive, still moving ahead, and I expect that to continue. Unemployment rates are going to remain very low in this part of the country. But they may even head lower in the weeks and months ahead.
What about the prices paid index? That continues to decline.
Absolutely, Cindy. We're seeing inflationary pressures coming down. And the number's still above growth neutral, but it's indicating at the wholesale level only modest inflationary pressures. And of course, this is positive from the Federal Reserve standpoint. Of course, they want inflationary pressures to be about 2%. Well, they're below 2% right now. So this gives the Federal Reserve, some room to maneuver in terms of not increasing interest rates anytime soon. I do expect that the September the 17th and 18th meetings, I think what we'll see out there is a statement that they're going to begin tapering QE3. What that means is the $85 billion per month bond buying program, they'll taper it to perhaps $75 billion, but it's still positive, meaning they're still going to keep interest rates low. So the idea that interest rates are going to bounce significantly higher, I think, is way much overstated. So that boosts confidence on the one side, and then it keeps and then the inflationary pressures are still low as well.
What about imports and exports? What are we seeing?
Wow, not good. Not good at all. And of course, that's not good for the U.S. economy. It's not good for the regional economy. New export orders came down dramatically. Still not below growth neutral, but it's just the direction is not in a good direction. Of course, Asia, slower and positive growth. Europe, negative growth, but it's somewhat improving growth. So we got those two really weighing on exports. Imports, on the other hand, were fairly strong. So what this means is the trade deficit is likely to grow in the months ahead, I should say, and that's going to slow overall U.S. growth. So the idea that the U.S. growth is going to be back to 3 to 4% anytime soon, our numbers say no. And for the region, we're still going to see the gap between the U.S. economy and the regional economy. We're still going to see a positive gap, meaning the regional economy, the Mid-American region, is still going to grow at a faster pace than the U.S. economy, but that gap is narrowing because our growth is coming down. The U.S. growth is remaining about the same, below 2% in terms of GDP growth. Job growth, gosh, 1 to 1.25% year annualized. This part of the country maybe 1.2 to 1.3%. Both of them, we need to see growth above 2% annualized in the job market to get back to pre-recession levels. That's probably not going to happen. Well, it's sequestration. Now, the president has made a big deal out of this. That's the federal spending, freezing of the federal spending, and that's continuing. That's having more and more impact each month, and a negative impact. When we asked this month, let me get those numbers, only 1% said there was a significant impact, significant and negative. About 31 to 32% said modest. Now that number is growing, so there are about 67, 68% said no impact. But again, that number, no impact, that the no impact is coming down, meaning it's having more and more of an impact, and a negative impact in this case, because federal spending, some of the companies, many of the companies depend on that federal spending. So that's one of the, I won't say negatives. I think on the flip side, sequestration is probably having a positive impact on private companies out there.